Hey guys, what's up? Alec back with the daily stock market. And look at that, we have a pretty good day going on today, up $649. So that's always a good thing to see. But what we're going to be talking about today is not how the stock market is going crazy or it's going up, down. You can see at one point I was down $324. And then at one point I was even up almost $1,000. Now we're chilling at $657. So we'll see how the day finishes off. But what this video is going to be about, we're going to talk about 5 different dividend stocks and some of my favorite dividend stocks. And we're looking around a 2% to 5% dividend yield, because typically what I found, if you go to higher dividends like 10% dividends, 15% dividends, you have to ask yourself, why is the company paying this much dividends out? And if you look at the growth chart of those kind of companies, typically they don't have consistent growth year over year, which is a very important thing to consider, because you can make more from the actual stocks growth rather than the dividends growth. Dividend, think of it more of like a bonus on top of the stocks growth. Okay, so the first dividend that we're going to be talking about is Nintendo. All right, on a lot of platforms, you can't buy this and you can't buy fractional shares too. So you just buy a full share, no big deal. But they're one of my favorite ones that I'm actively buying currently. They're down 14%, which is a big movement for Nintendo, and down 15% in the last 3 months. 5% on the year, but you can see they have consistent growth over the last 5 years. They've averaged about 20 to 30% per year over the last 5 years. So you get a 20% per year growth basically on Nintendo if we look at how the last 5 years have gone, and I think the next 5 years will be very good for Nintendo. Now, a good thing to keep in mind about dividend investing is that you also want to have these for long term. If you're a shorter term trader or you plan on holding under 12 months, then dividend investing is not necessarily going to be for you. You can really take advantage of it if you plan on holding for 1 year or more, and it really pays off if you plan on holding the stock for 5 years. So with that being said, you can see I have 40 shares of Nintendo. We're pretty much loaded up on them, $2,300. We're down 4%, which is not a big deal because, as you can see, they've been recently taking a big dip, so they can easily bounce back, and they're more of a high growth dividend. All right, instead of a high yield dividend, they're a high growth dividend, which I prefer more. You're still getting that 2.59% dividend, which is actually huge if you consider like bank accounts. You know what the percentage gains that bank account give you is like a half of 1%, or a lot of other dividends only give 1%. So 2.59% is still a healthy dividend, because remember, you're going to get that 20-30% per year. It's obviously not guaranteed, but there's a high probability with something like Nintendo, a well-established high market cap company with a fantastic PE ratio and a fair dividend. And what you always want to look for is stability in dividend stocks too. So the 52-week low and 52-week high, if we compare those against each other, you can see that it doesn't move too much. It's not like you're going to lose half of your portfolio tomorrow. That's why I'm comfortable with having such a large amount in something like Nintendo, because I know that it's not going to move too much. And currently they're close to their 52-week low. You can see is $56. And right now they are $59 a share. And the last time they were around $57 was 2018. So I think they're a great deal to be buying right now. Okay, so after talking about the gaming industry with Nintendo, we're moving over to the beverage sector, and we have CocaCola, one of the top leaders in the entire sector, down 1.2% today. Now, in the last 3 months, you can see they don't really move. So again, this is like a safer stock that you can park your money in, and you don't have to have a fear of losing a lot of your money, but you get a healthy dividend and some stock growth on top of that. They've grown 17% in the last year, and they've averaged around 5% or so in the last 5 years. I would prefer to load up on Coca-Cola below $50 per share for long-term holds. I have more on my other portfolio. I have like around $1,500 in my other portfolio. You can see their PE ratio is a little bit higher compared to some other dividend stocks. 30 PE ratio. I would like to see them closer to a 20 or 25 PE ratio. The market cap is a very large company, obviously. And look at that dividend yield, 2.9%. So you're getting a healthy dividend yield every single year. Remember, dividend yield just basically means how much bonus percent the company's paying you per year to actually hold their stock. So here we have 2.9%. And if you get in closer to $50 per share, I think in the next 5 years that Coca-Cola can even do better than their 28% they've had in their prior last 5 years. Now, as far as another one of my favorite dividend stocks to be buying right now, we have Verizon on the list. All right, telecommunications, which is going to be an important sector as the infrastructure keeps getting better and more towers go up and cell towers. Verizon's going to continue to be a leader in that space. All right, and they don't really move much. Also, they're more of a stable stock. The last 3 months, they're only down 1.5%. And in the last year, they've only moved 5%. And they're at a low. So they're a good time to be buying them. In the last 5 years, look at that. Look how stable they are. They've only moved 3%. So it's basically like a savings account at this point, a good money park. You're not going to lose money, but you're also not going to make much money. But the good thing about this one that you have a healthy dividend of 4.47%. So basically 4.5% per year is basically almost guaranteed at that point. Because you know you're not going to be losing money, you're not going to be gaining much money. But the good thing about this dividend on Verizon is that it's 4.9%, which is an extremely low-risk investment. The best you probably are going to be doing with Verizon is overall 10% per year. 5% from dividends, 5% from stock growth. So don't expect much more than that. But that's why I have such a large amount. I have 50 shares, almost $3,000 in Verizon. And that's just on one of my accounts. I probably have 5,000 total in Verizon or more. Just because they're such a secure stock that I know my money's pretty safe here. And I'd rather have it sitting in something like Verizon, Nintendo, compared to just sitting in a savings account. You can also see I have a $10 reoccurring charge on my Verizon, a $10 per day. Now, the next one we're talking about is Johnson & Johnson, which is a little bit more high risk compared to the last ones we talked about. What you'll see is in the last month, they're up 6%. In the last 3 months, they're up 4%. In the last year, they're up 19%. And in the last 5 years, they're up 44%. So they're good for about 10% on their stock growth per year. They are also a good play on vaccine. Remember, they're also a vaccine stock. They obviously didn't start out with that, but they recently added that to their repertoire in their company. Now you get a 2.28% dividend yield, which isn't the largest yield in the world, but the stock growth is pretty safe and consistent over the last 5 years, as you can see. The PE ratio is 26, and they also are relying on the booster shots in the future to keep their company going and keep growing revenues as well. So the booster shots might be interesting play on Johnson & Johnson over the next couple years, could be a predominant feature of their business. Now, personally, I would rather buy Johnson & Johnson under 100, around 150, as close to 150 as possible. But if I have to buy around 160, I think I'll load up some of my long-term portfolio. These are also good ones to stick in your Roth IRA. For the long term, if you have a Roth IRA, I like having some dividend stocks in that portfolio too. And the last one we have to talk about is Apple. Yes, I think it belongs into any dividend portfolio list. And a lot of people don't know it is a dividend stock, but yes, it is. You can see here they offer 0.5% on their dividend yield, which is still more than most savings account offer per year on their saving interest. So would you rather put your money into Apple, or would you rather put it into a savings account and earn the same amount of interest over the year? The good thing about Apple is you're investing into a company that has yielded 30% over the last year, and over the last 5 years has yielded almost consistently 100% per year over the last 5 years, which is absolutely bonkers to think about. Now, in the next 5 years, I don't think that they'll get another 446%, but I think Apple is a good one for around 10 to 20%, even 30% growth some years. And I doubt if you hold for 5 years that you're going to be averaging less than 50% over those 5 years, which would be 10% per year. So Apple is a win-win scenario for investing in dividend stocks, in my opinion, because you're going to make more from Apple than most dividend stocks even pay out. Because some of those dividend stocks, like we talked about in the beginning of the video, that offer 15% dividends, 10% dividends, they're not going to get you 30% per year, 20% per year. They probably will even end up losing you around 5% per year. So you have to take that out of your dividend. If you're getting 10% dividend per year, but the stock's losing you 5% per year in their equity, then in reality, you're only getting 5% gains per year. But something like an Apple can totally switch that up. They have a lower dividend. They still pay a dividend, and they will probably be increasing their dividends over the next 5 years too. So we can definitely see Apple around a 1% dividend, 1.5% dividend in the future. So I hope you guys did enjoy that stock market investing video. Make sure you smash a big thumbs up on this video. I appreciate all the love and support you guys have been showing me in the previous videos. All the comments, I read them all. I try to respond to most of them. So if you have a comment, drop it below and I'll be responding to the comments, and I'm picking 5 more people from the comment section and giving $5 to each person. I already gave away probably around $200 now just from the comment. So leave a comment, screenshot it, send it to me on Instagram for proof. And if you want to join my close friends list, also message me on Instagram asking for an application. I have had the close friends list shut this entire month, but I'm going to be opening it back up soon, so that's why I created the wait list. DM me for an application to get on the wait list. You can check out my website and see if the program is a good fit for you. All right, guys, share with a friend, drop a like and a comment. Make sure you're subscribed for more daily content, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.